Yo, what is up, everyone? My name is Dom, and we're here to talk about unusual options activity. All right, disclaimer: this video is for educational purposes only. The statements made in this programming are solely the opinion of the show and are not a specific inducement to make an investment. One must perform their own due diligence and realize that all investments carry risk. There's no guarantee of profit. Okay, so uh, just to give you guys a little overview if you're new to the show. So what I do is I talk about unusual options activity trades. You can find what that is in my description, and I kind of go through the trades, why I do the trades, explain my trading strategy, talk about the charts, talk about technical analysis. So even if you're not into trading options and such, I think you can still learn a lot from my videos just about trading strategies. I talk about just general economic things going on, things to be aware of. I talk about the Fed. I talk about stocks, obviously, ETFs, metals. I talk about a lot. So make sure to listen to the end if you are interested. So first trade I want to talk about today is silver here. Now we're looking for institutional traders coming in, buying big sweeps or blocks of calls or puts in ETFs and stocks. They are the smart money. Check it out in my description below. I have a little description of kind of what these traders are and kind of why they're smart, and therefore you can see they're coming in and they're buying a bunch of these calls here, 25,000 of these October expiration calls in SLV. This is the iShares Silver Trust ETF, so it mimics the price of silver. So to me, metals are a hedge against something going wrong in the economy or geopolitically. It's just a hedge against. It's kind of almost like Bitcoin, but Bitcoin is obviously very different. Metals are like a lot more safe. Our currency used to be on the gold standard. It used to be based on gold, so denominated in gold. So it's just an overall safety play, if you want to call it that. So that's what I think these people are doing here. They're going out to October. They're buying the 25 strike calls with the ETF at about 23.5. Remember, when someone's buying calls, they want the ETF or the stock to move higher. So I think they're just hedging against some kind of um, geopolitical something that might go wrong, either a recession, geopolitical fears, just the economy deteriorating. You can see silver has been on a heck of a run here. We're approaching some resistance at this 24 level here. So I do like that they're going out and they're buying some time for these options to work. But if you're going to buy time, you're going to pay for it. So the options are a lot more expensive than buying short-term options. When they're going out and buying these October calls, it tells me that they're not looking for a move very rapidly. It kind of tells me it's more of a hedge, especially when it comes to a metal, because they're just going out, they're buying the time, because SLV will move higher if, recession hits, geopolitical fears, a war breaks out, God forsake, whatever it might be that they're hedging for. You can see, I'm going to keep an eye on this one. You can see it's approaching some resistance here at this 24 level. Like I just said, we had a previous peak there. We had a previous peak around there, a little bit higher. We had a peak around there, a little bit lower. So overall, there's just a lot of resistance on this chart here. I would look to see a pullback closer to this 50-day moving average, and then I would enter this trade. But, it depends. You kind of got to take what the institutions are doing, see why they're doing it, try to formulate, get inside their head why they're doing it, and then kind of see where your market view is. I'm not sure I'm so bullish on silver here. I would be more bullish if it would have had a pullback. You can see we had a huge run up to about this 23 level, then we pulled all the way back to this 18 level. So this metal is very volatile here. I'm not sure things are going to hit the fan tomorrow. So me personally, I'm going to keep an eye on this one. Hopefully look for a little bit of a pullback. You can see this purple line, it's this 50-day moving average here. That tends to be resistance when we're in a nice uptrend here with the 50-day above the this light blue line, this 200-day moving average here. These are just other moving averages, this green and dark blue. But this is a bullish chart here, although we are approaching some resistance. I would look for a pullback to this 50-day around this 21, 22 level, and then I would probably look to play silver from the bullish side, especially if I see more traders coming in and buying calls here when the ETF that tracks this metal has pulled back to that attractive level that I was just talking about. So next one I want to talk about is a super short-term trade here. So I brought up that I was short Meta stock on this huge earnings pop that we got here. We were able to short it kind of around the high end here, and I covered the short around this low end here. Sometimes if it's a really good quarter and the stock pops up a lot like it just did, you don't get much of a pullback here. So I made, yeah, about 15 $10 to $13 a share that I shorted here. So that's pretty all right considering it was a good quarter. You can see on the last earnings pop up that we had here, the stock pulled back from about 195 to about 167. That would have been a little better of a short here. There, I'm not sure we're going to get much of a downfall here. If you take a look here at some of these options, now, Meta does trade a lot of calls here. I'm not in these calls yet. I'm going to be taking a look at these, although these expire this Friday. So this is definitely a little bit deep end of the pool trade here. You can see they're coming in and they're buying a bunch of these calls here. Now, they are getting some puts as well, but I saw most of the buys through my analysis in the calls here. You can see 25,000 contracts trading, 21,000, 23,000. Open interest pretty low. Although Meta does trade a ton of options here, so this is what I'm keeping my eye on. This is probably going to be a day trade for me. I've been doing a lot of day trading just because of how volatile the market has been in 2020 and 2021. And even kind of 2022, we did not do a whole lot of day trading because the market was just trending higher. The Fed was pumping a lot of liquidity into the system. Things were good. The economy was booming, although it didn't really seem like it was. You know, could be an argument whether that was artificially propped up or not with all the stimulus getting sent out. But regardless, the stock market was booming. The economy was doing very well. Now the economy is kind of going into a contractionary, recessionary environment here. At least that's what everybody thinks. Corporate earnings that we just had did not show that. Um, so that's what everyone thinks. The sentiment is really bad here in the overall stock market. I think that we can actually continue to push higher here, although we are coming up against this debt ceiling issue. Last time in 2011, the stock market sold off about 17 to 19% as we were coming closer and closer to that debt ceiling deadline. But you know, traders remember that, and if you sold at the bottom in 2011 because you were scared about the debt ceiling, you missed out on one of the greatest bull markets of all time up until recently when we entered this bear market. But I think we're coming out of the bear market, entering a bull market. Nothing goes straight up here, so I'm being cautious, using options to define my risk here. You know, in this case with Meta, we're only laying out $140 to control 100 shares, which would cost $23,000 at this strike price. So, but these calls can go to zero extremely quickly. That's what I always say about these extreme short-term options. They can go to zero. The stock moves, you know, down 2%. Your calls will practically go to zero. But you are outlaying such a significant less amount of premium that I think the risk reward is worth it. You have to dig into that for yourself here. Just a couple of trade ideas that I'm watching here. So make sure to like the video, show some love if you enjoyed the content, so I know to keep making more videos like this. Make sure to leave a comment down below if you've got any questions. More than happy to explain things. And also consider subscribing. I really appreciate it. People showing the love to the content and subscribing. I love to see that. Make sure to hit the bell notifications so you never miss a video when I put one out. I'm trying to be a little more consistent about it, but like I said, I've been doing a lot of day trading, so it's hard to put those kind of trades on the channel when I'm already out of it. You know, I'm trying to maybe put trades on that I'll put on the next day and do some day trading. Maybe I'll switch it up and kind of make just some completely different videos, not always talk about unusual options activity. But I would appreciate the feedback. If you guys can leave a comment down below. If you got any video suggestions, more than willing to do that. If my videos are too long, you know, you don't want to sit through it all, let me know. Here for criticism, constructive or not. So, thanks for watching. Make sure to like the video. Consider subscribing. I really appreciate it. We'll see you in the next one.